G'day and welcome to this week's video. This week we're going to have a look at the tech monsters around the world and what's been happening with their results recently, including their share prices. So as you can see here on the international indice chart, we've got the Aussie market down below there, we've got the FTSE, the Pommies, and then we've got the two American main indexes here. One is the S&P 500 and the other one is the Nasdaq. Now this is one day's trade. It was a Friday night a couple of weeks ago, and we had three of the biggest companies come out and report, and that was Amazon, Microsoft and Google. Now these are some of the biggest businesses in the world. They're $600 billion plus businesses, and what's surprising everyone is how much they can grow their revenues by. And obviously the results on this night's trade in the US really has surprised many of the analysts that they're beating expectations substantially. So it brings into question, how big can they get? And I think everyone thinks there's a ceiling. But given the scalability of these businesses, they're run by algorithms and it's software. As a general rule, it's highly scalable. You can build the system once, the program once, and it's working behind the scenes and can look after obviously many transactions. So let's go and have a bit of a close look at what happened with Amazon. So Amazon Prime memberships, that's a membership offer for people over in the US where they pay $110 a month and they get free shipping as well as other priority options. Their web services, such as cloud computing, increased by 42%, and the third quarter earnings itself increased by a massive 34%. And you can see here the revenues in this big retailer are massive. The shares on the day gained by 13%, and that was the equivalent to around $62 billion, which is substantially larger than most Australian businesses, the large majority of course. So it's the scalability of these businesses that make them behave like a small cap. To receive a third increase on your earnings in 1 year is absolutely exceptional, and you normally only see that in very small businesses that are ramping up sales. So these monsters are still providing just substantial increases in revenue and therefore profit, and that is pushing share price up. Google, on the other hand, had another cracking report, 23% up in revenue to nearly $28 billion. YouTube itself, it's one of their many businesses, has 10,000 million viewing hours per day. That's a 70% increase in what was happening the year prior. And so if you think about that in terms of where the advertising spend's going to go, and more so as the smart TVs come into our land room, I think these 70% increase in 1 year is, these are absolutely astonishing. And what it's doing is dragging if the eyes are there, it's dragging the advertising money to that place, and obviously Google is benefiting from that. And shares jumped well over 4% on the day. So I think it begs the question is how big these businesses can get. We just naturally assume that there must be a ceiling, and I would suggest that we're talking about software and algorithms that Google can have a 70% increase in viewers and people watching their platforms, and yet while obviously there'll be some work's got to happen in the background, but not a terrible amount that it costs them substantially more to look after those extra viewers or those extra searches. So tech's a very interesting place. We're watching everyone trying to predict that it's a bubble and it's going to crash at sometime soon. Unlike the tech wreck in the early 2000s, this surge looks like is backed by revenue and profit, and obviously that's what we use to value companies. Thanks for listening. We'll catch you next week, and if you like the video, give us a thumbs up and please subscribe to the channel. That'd be great, and we'll catch you later on. Bye.